Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. A gapping move up after the weekend's events, over the 73.18 to 73.73 congestion, right through target X, which I'd left up there at 73.25, up and out of the December 25 based bullish Andrews Pitchfork over the April 2019 high at 75.58, though this is now possibly becoming a new support. Up through the close together 50% Fibonacci lines of the April 21 to March 23, we move at 77.54, and December 23 to April 25 move at 78.05. Up through then up through a fairly free area until the August 23 low at 81.86, and halting just before the interesting combination of the January 25 high and the 61.8% Fibonacci line of the December 23 to April 25 move, both at 82.68. This was by all standards a very extraordinary move higher, but to me what was even more extraordinary was how we ended up closing lower, and by a considerable distance lower than the opening. In effect, this was a bearish long black Mariboso, after a huge gapping move higher, closing just over the 50% Fibonacci line at 77.54. I have downgraded the December-based bullish Andrews Pitchfork prior to retiring it, and yesterday, to try something different, I drew a January to start of February bullish Andrews Pitchfork to try and accommodate the large breadth of move we have had. I am not happy about this one, not happy at all, as it has a very significant majority of the market action outside the pitchfork. But I wish to try, and we are we're right now just under the upper time, which is currently 83.25. So far today, well, a higher open right on the middle time, which is currently 79.13, of that newly drawn, uncomfortable bullish Andrews Pitchfork in what is in effect a fairly free area overhead. And we've moved up to test and go through the August 23 low. Once again, we're up towards that January 2025 high and 61.8% Fibonacci line for December 23 to April 25 move, and that's at 87.68. This now puts into the frame that potentially dark blue neckline above the market for the September to November 2024 head and shoulders top. That helped cap the market back in June, so it's important to think about that one. Spot gold. After this weekend's events, to be honest, relatively small gapping move higher at the open, which has since been filled in. The top side is very close to target X at 54.40. but has not quite managed it as yet. This is the primary target for the bright red February-based ascending triangle pattern, currently 50.44 to 51.11, even though this pattern does not have the correct number of touches. I had last week laid out some targets for this pattern for primary target X in the 54.40 area, around where the 100% projected Fibonacci line sits at 54.48, with a harder to reach secondary target X1 up in the 55.80 area, just under the all-time high. As I said earlier, this is not a perfect pattern, so please bear that in mind, though the overhead area is fairly denuded of resistances for quite some while. Interestingly, yesterday's action finished the day as an indecisive spinning top pattern. Now, in the bigger picture, we have the dark blue late December 25 to early February 26 bullish Andrews Pitchfork, which I drew 3 weeks ago and which I still consider able to show the bullish angle attack of this market. I may of course finesse this to a shallower bullish shift pitchfork for the same move should needs require it, but right now this works, and we're in between the dark blue lower tie below, currently at 51.01, and a dark blue middle tie above, currently at 57.33. So far today, a pullback lower so far after an early attempt higher. We're back within last week's, well, we were back within last week's range and just below last week's close and high right now. Bitcoin. A bullish white soldier yesterday after the previous session's immediate countering bearish double. I've decided today that the small sideways triangle, which is currently 66,750 to 68,140, formed over February, which I had previously championed as the immediate pattern idea, no longer holds water, and I've downgraded it, as well as removing the final secondary target X below for the break under the sideways triangle in the 58,017 zone. The primary target was enough, it seems. We nevertheless still have, in the midst of the recent action, the bright red neckline extension, currently at 67,624, and that's of the August 2021 to January 2022 head and shoulders top pattern. And it is best to keep an eye on this trend line extension for a while. Looking below, we have support from the April 21 high at 64,929, just above the important 50% absolute Fibonacci line at 63,129. Whilst above, we have the resistance from the October and November 21 highs at 67,058 and 68,977 respectively. Now, going back to that bright red neckline extension, I did say late last week and the week before, and I think it's a very prescient quote, this bright red neckline extension is a key element in any moves lower, as it is a sentry ahead of the important 50% absolute Fibonacci line at 63,129, end of quote. Well, this statement is still valid today, as this 50% absolute Fibonacci line has halted the declines throughout late February, and as I also warned last week and the week before, and I quote, so please look for any confirmations below rather than just the one close, a common mantra in all such actions, end of quote. In the bigger picture, we still have a very large October 2025 to date bearish halfway hesitation in progress, with the primary and secondary targets of this pattern already achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone. Additionally, I had also highlighted another pattern earlier, here a bearish pattern, a February based bearish cat's ears pattern. This is a small double top pattern that forms after a big drop such as the one we had in early February. The key trigger for this pattern was the low 3 weeks ago at 65,080. Last week we had consecutive closes below this level, so I laid out possible targets below for this pattern, with a primary target X1 down in the 59,223 zone and a secondary hard to reach target X3 down in the 52,986 zone. Despite the recent action, I will retire these two targets below after this commentary. Finally, as I've said last week, we have the potential showrunner for the recent moves, and that's the bright green early October 25 to mid-January 26 bearish Andrews pitchfork, with the market today in between the overhead of bright green upper time, which is currently at 73,757, and the bright green middle time below, currently 51,328. There is no change to this point of view right now, but I am of course prepared to finesse this bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move should this be required. So far today, a reactionary move lower below the bright red neckline, though still within yesterday's range.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftpick and ADM Investor Services International Limited. And here comes the final important bit.